IRGBOP, looking at potential impact from the budget from last week. Most people have now had time to digest the comments from Mr. English in the budget. I suppose the interesting point was that yes, they did give quite a bit away, but that has been balanced by tax increases elsewhere in the system. If you look at it from an investing perspective, we've seen the top PI tax rate move down. So although they have reduced the differential between the top personal tax rate and the PI tax, was 8%, it's now down to 5%. There's still a reasonable incentive out there to invest in PI products if you're a high rate taxpayer. So that should reduce some of the potential selling pressure that some of the analysts were looking at if they reduced the personal tax rate and just left the PI tax rate unchanged. Elsewhere, we've seen obviously the moves to close some of the loopholes on the property investments, and it's yet to see how they will really play out in the system. But it's fair to say that there is certainly a bigger incentive out there to invest in sort of savings products and investment products, as opposed to the property investments which New Zealanders have traditionally invested in. If you are interested in how that will impact on your portfolio, call us on 0800 867 323 to discuss this further. The other potential issue is the anticipated increase in inflation on the back of the GST increase to 15%. Some analysts are forecasting this could be as high as an increase in inflation to 6%. Now the big issue is that just going to be a spike, or is that going to be a prolonged inflationary figure coming through into the New Zealand economy? If it is, then it does have a major impact on fixed interest investments. And again, if you're concerned about your fixed interest holdings in your portfolio, call us on 0800 867 323 to discuss this further. Globally, we've seen a very volatile week for share markets, but the news coming out of the US on a Saturday morning New Zealand time was that some of the financial reforms have been passed, and the bank shares rallied quite strongly on the back of that, up around 4 to 5%. So that should put the New Zealand market on the front foot at the beginning of the week. Obviously Europe is still playing out, but again some slightly positive news out of Europe over the weekend that Germany will be contributing to the bailout package, and it appears to be sort of stabilising short term, with the euro finding a bit of a bottom and actually increasing in value on Friday European trading session. Fundamentally as well, the data coming out of the economies is still pretty positive and supportive for growth, but we're just seeing some minor speed bumps with this uncertainty over the sovereign debt issue in Europe. Risk statement available on request. Call us on 0800 867 or go to the website www.irgbop.co.nz for lots of interesting articles, investment statements and news. And we look forward to speaking to you soon. Thank you.